So welcome everybody. So this is the first of our fireside chats with our new partner Attivo. So I'm Keleigh, the commercial partnerships lead here at Pluxee. And I'm joined today by Ben, who is a chartered financial planner from our newest partner, Attivo. So before I introduce Ben and let him kind of talk a little bit around himself and Attivo, I just wanted to set the scene here for everybody, just so you kind of know what to expect today. So what we're going to discuss today is all about helping build that trust, confidence, and that retirement readiness at work. So we have picked retirement out as one of those key pillars, but we will of course discuss kind of everything that Attivo encompasses and why this partnership came about, and of course in turn why that supports you and your businesses be more fruitful financially, and making sure those employees are supported. So what we're going to explore is why financial well-being is a business question, not necessarily a personal failing. So we'll run some temperature checks on the realities of pay progression and income growth. We'll discuss how today's pressures can affect employees' plan for tomorrow and actually look ahead and have the headspace to do so, and how you can of course support those employees financially across all the different life stages. So we know that employees are not static. We know businesses are not static. So we want to support them across every different life stage they might be going through. So some of you joining today are clients of ours. So thank you for kind of trusting us and continuing on this journey with us. And some of you might be prospects or people just trying to find out a little bit more around Pluxee and Attivo. So welcome to everyone. But if you do use our employee benefits platform or our new employee experience app, you know now that you will have access to the financial wellbeing hub that is actually powered by our partner Attivo. And what we've done is built this as a core service to your overarching offering for the employees, and that is at no extra cost to your business. So just by being a client of ours, you have a whole host of new information around financial wellbeing within that hub. And this call today, I think, is a really good opportunity to understand the real value that is within that financial hub. And it'd be a great time as well to put forward any questions that you might have. So please feel free to jump in, add questions into the Q&A at any time. We're really, really keen to make this a fluid discussion. So again, before I introduce Ben, I just wanted to kind of talk a little bit around money. So we know it can be a really tough subject to tackle, both in personal life, but of course at work. Those employees just might not feel comfortable at all to talk about that topic. The stat that we have is over 50% of employees say that they're uncomfortable. So over half of the workforce don't feel they can talk about money at work. So you obviously as the employer need the confidence to draw that out of them, give them the information so that your workforce has access to that regulated and trustworthy content. So before you join the call today, we gave you a selection of statements to choose from that resonate with you most and asked you to select one of those statements. So from that, we've seen that 46% of you are looking to sense check your current approach. So just looking to kind of find out more information, understand how you currently work and see where this might be able to support further, which is really good because we want some generalized information to come out of this call today and make sure we're helping the broad reach of our clients and employees. So that is a great one to hear. And that's exactly why we're here today, to embed you with that information. So without further ado, before I continue to chat on about money and everything financial, I'd really like to introduce Ben, so our partner here today. If you want to introduce yourself and talk a little bit around how we're going to tackle this topic together, Ben.
Absolutely, yeah. So thank you so much, Keleigh, and good morning, everyone. So I'm a chartered financial planner, and I work for Attivo, so we're based in Cheltenham. So who are Attivo first? So Attivo, we're independent financial planners. But what does that actually mean? So as independent, it means that we can use the whole of the market. So we're not tied to any single investment provider or investment houses, which always benefits clients because we can pick the very best rather than having a limited pool to choose from. But lots of people quite often ask me, Ben, what do you actually do as a financial planner? So my role as a financial planner is to look after my clients. So I've got about 180 households and I help them with pension and investment planning. tax mitigation, and also inheritance tax planning as well. And as a company, we've got 9 offices around the UK and around 50 financial planners helping clients. And what we tend to do, so we offer like holistic financial reviews of client circumstances. So individually, kind of pensions, ISA, mortgages, life insurance. But then if we look at our new relationship with Pluxee, what we're looking to do is work with the employers more. So we do have a corporate team, and that's going to be sort of reviewing pensions for them, reviewing benefits. So that's things like life insurance schemes, healthcare, things like that. But also offering things like webinars and seminars and clinics. So actually, as employers, you can say, actually, we can offer this benefit to our employees. Someone like myself can come along, present the benefits of financial planning, and then offer clinics to actually just answer all those questions we get asked, and hopefully benefit your employees that way.
Great, thanks, Ben. So the first kind of topic that we want to talk around is why financial well-being is a business question and not necessarily a personal failing. So why you as businesses can really support your employees in getting this right. So I guess to set the scene there and some stats around that. So we know that 52% of employees say that financial pressure affects their job every day. So that financial pressure is something that they are bringing to work. They are actively thinking about day in, day out, which is a huge, huge stat. And then we've got 41% say that money worries reduce their ability to perform at work. So it's actually affecting their performance, their productivity, how they show up for work or within meetings. And then nearly half of those employees struggle to focus or concentrate when dealing with financial anxiety. So that again might be through different life stages, that might be heightened at different years of their life, or different ages that they are navigating through. But yeah, half of those employees really struggle to even concentrate because that is something that they're thinking about and bringing to work on most days. So I think this is why it leads us on to understanding how businesses can actually support and why it is more of a business question rather than a personal one. So Ben, you're here as obviously our expert and our partner today. So when we talk about financial well-being at work, what do we actually mean? To start from the very top, what does that mean? Is it security, flexibility, confidence? Is it all three? Is there more pillars that you want to share with us?
Yeah, no problem. So I think financial well-being to me is probably financial independence. So part of my job really is helping clients build their pensions and their investments. So ultimately they can retire at whatever age they wish to, and actually then they can move away from work and feel confident and secure in what they've got. But actually for sort of employees, I find a lot of it is actually security. So security, your family's covered via life insurance, critical illness, income protection if you're not able to work anymore. So you've got that cover in place. But also just knowing where you are in terms of your own finances. So actually, am I on a good track to save for my retirement? Am I on a good track to save towards my first house? And setting goals. And that can be simply reviewing debt. Can be paying down credit cards, the best way to do that. And also, most importantly, reviewing income and expenditure. So actually seeing where you are every month and then how you can put a plan in place. And that might be saving for your first house. It might be saving for retirement. It might be saving for a new car or like a dream holiday in a couple of years' time. But it's definitely all about sort of tax efficient investing, and also having the confidence to know you're on track with regard to your own finances.
Great, thanks for that, Ben. So I guess to go back to, again, the reason why a lot of you are here today and wanted to join this webinar with us. So we've got 20% of people on the call are here because they're assessing their financial well-being strategy. So just looking at what they currently have, if anything at all, and assessing whether that is right for their business and their employees. So I think to layer on what you've just began with there, I think it's a really good time to ask, where do employers actually have that influence, or where do they not?
Yeah, so I think in terms of employees, of course, they're obliged to provide a pension now to every employee. And actually, I think the biggest thing is people firstly don't understand their pension because they're enrolled in it and it's not really an option. But actually how they increase contributions, how they decrease contributions, how they do that. And actually quite often it's a simple email to HR. Can I increase my contributions by 1% or £50 a month or £100 a month? And actually it's just going through different life stages as well. I always try and tell clients, every time you get a pay rise or you get promotion, if you can increase your contributions by an extra 1%, of your salary, that makes a huge difference, because over time that money compounds and gives you a bigger pot when you do want to retire. But also it's flexible. There are minimums which have to be into your pension, but actually, if you're in your 20s and your 30s, maybe you haven't got quite so many commitments, maybe not children yet, you can put more in. But actually, when you've then got children, if you need to reduce your contributions into your pension, you can do that as well. So it's really super flexible, and it's just having the means and understanding of how to do that.
Yeah, I think I'm a really interesting example where you say around kind of that pay rise piece and adding in more. You don't always think that that is an option to do so.
Definitely
And
not.
I think before we partnered with yourselves, I had about 4 different pensions from previous job roles. So I think even the consolidation as well of them into one space and having the visibility of that is hugely helpful for that confidence and trust piece.
Absolutely, yeah. Like simplification as well, all in one place. It's simple,
Yeah,
easy to understand, and then you know where you are as well.
exactly. So what I'd like to do now is kind of involve the room a little bit. So we just wanted to try and take a temperature check. So to speak to everybody here and ask the audience, on a scale of 1 to 5, how confident do you feel about your long-term finances? So not just your current bank balance, we're talking about that long-term finance. How confident do you feel around that? If you could just use the poll that should have shown up on screen now. So 1 being not confident at all, and then 5 being very confident. So I can see some of the answers coming through. So we've got the highest percentage at the minute is 39%. So very much in the middle at that 3.2, which isn't surprising, because that's where I would also place myself, and I think feels kind of like the safest place to go for. You're not 100% confident, but you're not really unconfident. But we do have some in the 4 category as well, which is good to see, the 35% into there. You got any thoughts on that, Ben, in terms of with your experience, who you speak to?
Yeah, I think it's really interesting. I think quite often it's finding the time to get control of your finances. Actually, work's busy, life's busy. And I absolutely see that sort of pension planning quite often gets kicked down the road just because it
Yeah.
always seems a long way off. And I think people live in the day, don't they? And I think it's certainly generation as well. I think young people certainly probably have maybe a slightly better understanding of finances,
Yeah.
but maybe don't want to commit to the planning quite so much.
Yeah, no, it's a really interesting point. It's having that headspace, isn't it, to actually think long term, which
Yeah.
brings us on nicely to our next subject. So, to kind of talk about our next area, we're going to look at that pay progression piece and that real income growth. So, now because the pattern of pay increases over the past few years, alongside the rising cost of living, this really feeds into money worries. So, just that general rising cost. We know every time we go to the supermarket, there's a couple of pence added onto the items that we're buying, and how that actually affects your income growth and how your pay it is spread across the month and how you're living a fruitful life. So Ben, to your point, so looking back over the past kind of 3 to 5 years, what do those pay increases look like over the UK?
Yes, I absolutely, like you mentioned, inflation's been high. Over the last 5
Mm.
years, inflation's just under 30%. So actually, if the cost of living is going up by 30% over a 5-year period, if your pay hasn't kept pace with that, absolutely you're worse off, and you haven't got as much in your pocket. So the median salary in the UK now is just over £35,000. And I think that, people still do feel the cost of living is high. But actually, if we look at wage growth, wage growth has kept up. Employers have had to meet those increases which have been demanded by employees. But of course, that puts pressure on business as well, because actually you've got increased national insurance, increased responsibilities with regard to sort of providing benefits as well. And also the fact that I think now people are willing to move between employers a lot more. When I have clients who are older and who are retired, they maybe work for 1 or 2 employers over a 40-year period, whereas certainly, a lot of my friends have worked for 5 or 6 employers in a 15-year period. So it makes a huge difference having moved around and also having maybe pension pots all over the place, and people are more willing to chase pay rises now.
Interesting. Okay, so I guess what we're seeing here is that while pay has risen on a whole, the rate of inflation minimises the real impact of that increase that's actually seen, I guess, in your take-home salary and kind of how you live your life. So going back to needing that headspace to think ahead and really plan, I know for one, I wish I started doing a bit of investing many, many years ago, because the compounding that I could have seen now would have been huge. But again, hindsight's a funny thing, right? And that's why we're here now, to support our clients and employees in turn. So in your experience, what planning behaviours get kind of delayed and pushed aside when that income growth feels really uncertain, and when that is the kind of overriding factor?
Yeah, I think what I've seen recently, certainly in the last 5 years, is a lot more people holding cash. So they've got cash in the bank. It makes them feel safe, secure, they can access it. But I think the key thing is, if we come back to inflation has been 28% over the last 5 years. And I think there's going to be a chart for us to have a look at. Whereas actually, Bank of England interest rate has been 18%, but actually a medium risk portfolio, so an investment portfolio, has actually returned about 45% over a 5-year period. So actually, to achieve above inflation returns, you have to invest. What puts people off doing that? I think it's probably the gap in financial planning, and actually people seeking financial planning advice. And quite often, financial planning fees are generally paid from pensions. So if a client comes to me and they want guidance on their pensions, they normally pay our fees directly from the pot. It's not from their own pocket. And I think the biggest mistake people think is, actually, I'm going to invest, but I'm going to do it in 6 months, I'm going to do it in 12 months. And actually, before you know it, 5 or 10 years have passed. And actually then you're in your mid-50s or 40s, and then you think, right, I really need to think about my retirement planning now. Like you mentioned, Keleigh, the sooner you start investing, that compounding has a huge impact. And there's absolutely no way you can beat returns from investing over the longer term due to compounding. And also, like, cash is never king. We all need some cash, and all my clients should have. If you're retired, maybe like 12 months expenditure in cash, but cash isn't king. Investing over the long term, where affordable, is absolutely like a catalyst for long-term growth within your own finances. And definitely that helps you when you reach your mid-50s and into your 60s, when you're rethinking about retirement strategy and how you then want to set out your retirement plans for the future.
Yeah, I think to layer on that point as well, from a kind of Pluxee employee benefits perspective, I think it's getting comfortable with those financial planning options as well, to help those employees actually make use of their benefits and actually save money using the tools that we have. And I think often the awareness and understanding, or kind of confidence in how to access, sometimes is the deeper issue. And when employees feel more financially informed, they're far likely more to engage in the benefits and the support that is given to them, whether that is savings, pension, or simple things like wellbeing support or salary sacrifice benefits as well. And I think to that point, we know there's people on this call today that are engaged in that as well. So we had about 10% of people on the call that feel like short-term financial pressure is blocking that long-term planning. So that was a topic that resonated with almost 10% of you. So really important one to delve into. So yeah, thank you for sharing that, Ben. And I think that leads us nicely on to the next section, because what we want to discuss now is that planning gap. So why is there a gap? And the short-term pressures that actually affect the ability to think a little bit more long-term. So we know on the call as well, 21% of people wanted support around that retirement readiness. That was obviously one of the main topics we wanted to discuss today. But they're worried about overstepping. So how much information is okay to share or ask their employees? So we really want to delve into that. So the remainder of the conversation will be kind of steered towards that a little bit. But the reality today is that the small amount of people seeking financial advice versus the need for it is hugely vast. So 8% of UK adults sought out regulated advice in the past year, and just 9% of the UK population pays for financial advice. So that's roughly 1 in 10 people actually getting that professional advice, which is just mind-blowing. And we know our many people maybe in the US or different countries around the globe use financial planning as just their bread and butter to their day-to-day. So it's really interesting that we are a bit behind there in the UK, and we want to kind of build more confidence and trust around kind of seeking out that advice. And yeah, those stats for me were really, really surprising. And when you consider that figure against the 41% of people who say that money worries are impacting their work, again, it just kind of doesn't correlate, and we need to kind of break down this gap that we have here. It's abundantly clear that that short-term pressure is very debilitating when it comes to being able to actually think long-term. So I guess in a roundabout way there, Ben, I've thrown in a lot of stats, but my question for you really is, so why is the long-term financial planning often the first thing that is deprioritized under pressure? Do you think it's a lack of the engagement or just disinterest, or is it truly just that uncertainty about where do I even begin?
Yeah, I think it's a really interesting point, because actually there is a huge gap in financial planning. Like you said, in the US, investing regularly is a much higher priority for people. But actually, I think the first thing is it comes to cost. People think, actually, how do I pay for financial advice? And like I
Yeah.
mentioned before, actually, a lot of it's actually paid directly from pensions you've already got. And I think if I look at my kind of average client who contacts me, it's probably someone in their 50s. They say, Ben, this is what I've got. I think I want to retire in a decade, but I'm busy. I've got maybe parents who are maybe in their 70s or 80s. They might have inheritance tax issues. So then what I tend to then find is I then help parents with inheritance tax planning to help them mitigate that.
Yeah.
And then also they've got pressures from below. They've got children who are maybe doing exams at university, maybe getting on the property ladder. So they've got sort of pulls on their time from above and below, which I think is really interesting. And it does limit their ability to actually look at their own finances. But actually, I think the key thing is planning, forward planning. And if a client comes to me, it's generally amalgamation of pensions, so it's all in one place. Putting a plan together. So then I want to retire at 65 and I want X amount per month. How do I do that? And then simplifying debt, reviewing income and expenditure, but also critically taking like independent and professional advice from individuals like Attivo and myself, who are regulated by the FCA. There's a lot of rules about how we give advice, but that's for good reason. So absolutely, so that the advice you get is good and it's proper, and also that it's independent as well, because independent advice is only in the client's interests, whereas restricted advice is quite often in the interests of the company providing it, because they're pushing their own products. And I think hopefully, I think Pluxee wanted to engage with Attivo because we kind of tick the chartered part. So we've got lots of qualifications and passed lots of exams, but also the fact we can go independently to all those providers and offer the best advice.
Yeah, absolutely. Yeah, that sounds great. I think, again, to involve the room, it'd be really good to pop another poll out there. And what we want to ask this time is, what's harder right now? So is it finding the money to actually plan ahead, or is it finding the headspace to do so? So that poll should pop up for everyone shortly. And while we wait for those answers to come in, I just wanted to quickly kind of tease into our next subject, which is a bit more around kind of that pensions and retirement area. So Ben, has a bit of a quick fire question. So should people take all of their tax-free cash out of their pension? Is that the right thing to do? And additionally, how much tax will they pay to take their money out of their pension? What does that look like?
No problem. So yeah, lots of clients come to me and they say, Ben, I want to retire. I want to take all my tax-free cash. And I
Yeah.
say, no worries. What are you going to use it for? So if it's paying the mortgage off, paying loans off, things like that, absolutely, it's your money. But actually, it's super flexible. You've got 25% of your pension. You can take it all at once, but most people now actually take it as they need it. So ad hoc. So right, Ben, I want to go on this amazing holiday. I need X amount. Can I take that as tax-free cash? But also with regards to your 25% tax-free cash, you can also take it monthly. So it's a regular income. So you can then ensure you're not paying too much income tax while also taking, tax-free cash from your pension. So it's super flexible now.
Mm-hmm. Okay, great. That's good to know. So looking at the poll that's came through, it looks like 79% of people are talking about the headspace as the blocker in terms of planning. Again, is that something that's common for you to see?
Yeah, definitely. I think when I meet clients, I kind of all of our initial meetings are like free of charge. It's normally like cup of coffee, cup of tea. How can I help you? And then they kind of offload all their information to me. But I think the key thing is putting some time aside. And, I'll say, right, for our first meeting, we're going to need 45 minutes or an hour to actually go through how I can help you. And then actually from there on, if they wish to sort of seek our guidance, then actually I take the pressure from them and actually take responsibility for managing their investments and pensions. And I think actually quite often that's a big relief. People can do it themselves, absolutely. But I think actually having a professional do it for you, and then you're on track as a client to retire or meet these objectives, actually is really quite like cathartic in sort of knowledge that it's under control and now being managed for you.
Mm-hmm. Okay, great. And hopefully kind of webinars and meetings like this, again, give that kind of headspace to be able to sit and think for an hour, and then how our businesses joining us today might then share that with their employees as well.
Yeah, definitely. I think one of the benefits is, your sort of the businesses you work with can bring in a company like Attivo and give guidance in terms of like a presentation, but then also like one-to-one. So just giving guidance to their employees where, like you said earlier, Keleigh, they don't feel they can talk to their employees about their own finances, but actually
Yeah.
to someone independent of their employer, they're quite happy to.
Yeah, agreed. Okay, well, moving on to our next subject. So, continuing the topic around that potential uncertainty that's felt there in the UK and with those on the call and our clients. So, the 2025 autumn budget announced the changes due in 2029 around the salary sacrifice pension schemes. So there's been a lot of questions, I think, around that have came up within our client conversations, and I'm sure within yours as well. So if the planned NIC free cap for pensions were to change in 2029, what assumptions would that disrupt? How would that affect?
Yeah, no problem. So in terms of what is salary sacrifice, so what that allows you to do is put money in your pension before you've paid tax or national insurance. So if you're a basic rate taxpayer, 20% tax saving, and also 8% NI saving, so national insurance saving. But from 2029, it's being proposed that be limited to £2,000. But I think the key takeaway from this is, contributions into your pension will then be subject to national insurance. But the key thing is you'll still get 20, 40 or 45% tax relief on those pension contributions, depending on your tax rate. So even beyond 2029, paying money into your pension is still super tax efficient. And I mean, for example, anyone who's earning in the fortunate position of earning over 100,000, you lose all of your personal allowance between 100 and 125,000. So actually, pension savings are the best way to mitigate big tax bills. And actually, you can save for your retirement tax efficiently. But there are some big changes going on at the moment. And of course, we know the government do need to find more money from where they can. And salary sacrifice is kind of being the target at the moment, at least based on pension contributions.
Mm. Okay, it's interesting you mentioned state pension as well, because one of the questions that we see commonly crops up and that is asked is, does the state pension work alongside your private pension, and kind of what does that
Yeah,
mean?
absolutely. Yeah. So state pension, it's about £1,000 a month, give or take, depending on when you claim it. And of course, if we take normal household, maybe Mr. and Mrs., two state pensions, that's £2,000 a month. And what I tend to find is, yeah, that provides sort of the basic income to pay the household bills and fill the fridge with food. But then it's
Mm.
personal pensions on top that kind of bridge the gap between a basic standard of living and then being able to do all those things you've always wanted to. And we incorporate that into our plan when a client says, right, Ben, I want to retire at 65. I want £4,000 a month, £3,000 a month. How do I get there? And
Yeah,
it's really the advice there that gives you the ability to have the kind of peace of mind that you're in a good place, you can do that. And I'm absolutely an advocate for people pushing forward spending early into retirement to really enjoy it while they're young, fit, and healthy.
yeah, agreed. Um, I think as well, looking onto our next subject and how that nicely aligns as well in terms of that financial well-being across life stages. So we're talking obviously on that latter life stage at the moment. Yeah, and we like to think, is retirement that one big moment, that one kind of magical moment where you go and live your best life, hopefully with all that money that you've earned over your career. So we've talked a lot about future planning and pensions, but being retirement ready isn't just about having that solid future plan. We all know that. It's maximizing financial well-being across every life stage, and those key milestone impacts as well, and how that kind of builds financial resilience throughout your life. So a lot of how we support our employees and our clients at Pluxee is around understanding the needs at different life stages. So it's really key for us to make sure that we understand that everybody is different, going through different life stages at different ages as well. So just because someone is buying a house at 25 doesn't mean that someone else isn't buying a house at 45, 50. So that's really important for us to understand. So in your experience, Ben, how do financial priorities shift between kind of early career, mid-career, and later life stage planning, just to bring it round for our employees to understand kind of what areas their employees might be in with their life stage?
Yeah, so what I tend to see is clients in their maybe their mid to early 50s, they then review their pension. And if there's a gap, they then really start to throw an awful lot of money in there based on maybe children having grown up a bit more, maybe mortgages being lower or paid off. But what I tend to say is really push on employees the benefits of putting that extra 1 or 2% into pensions, because
Mm,
the compounding effect is massive because you've got decades before you retire. And pensions are flexible, like I mentioned earlier. When you've got surplus income, absolutely put a bit more into your pension and see the impact of that as it grows. And you get that yearly statement, and it looks great when it's gone up and you've built that pot
mm,
higher than it was last year. But also the tax relief that's applied, and also just knowing that pensions are flexible. You know, if you've got surplus income, absolutely take advantage of the tax relief applied. But if you're in a stage of life where you've got maybe nursery costs, you've just taken on a bigger mortgage, you know, reduce those contributions to your pension if you need to. But absolutely, the best bit of advice is every time you get a pay rise or a promotion, increase those contributions just a little bit. And it makes a huge impact over time. And I think the sooner you start putting a bit more into the pension, future you will absolutely thank you for it, because
yeah.
then when you are in your maybe mid 50s and do sort of really turn to retirement planning and maybe contact a financial planner, you're just in a better position.
Yeah, no, definitely. And I think it all goes back to that point around, I don't know, getting confused and having the headspace to kind of know where to turn. So that's where the advice I think is really invaluable. And I guess bringing it back to that Pluxee piece and life stages and having that financial wellbeing hub that we now offer, I think it's great because it breaks down that almost stigma maybe sometimes and gives that confidence and trust.
Yeah,
Um,
definitely. And I think now I meet more and more of my clients at the workplace. So actually
yeah.
on their lunch break, have an hour with them and go through it. And actually it feels like, you know, it's not eating into their personal time.
Yeah, absolutely. That's a really good point. I guess to bring it back to the room as well, making sure everyone feels included. We don't want it to just be a conversation between myself and Ben. So we're going to pop up a word cloud, and I thought it'd just be really nice to kind of take a view from the room, what life event you might have been going through in the past 5 years or so, and how that might have changed your financial priorities the most. So I guess to give a personal example, I got married this year. Last year, sorry. I wish it was this year again. And that obviously ate into a big chunk of kind of my savings and how I was planning financially. And then coming into this year, because I can't keep still, I'm doing some home renovations and looking at putting money into that. So that's kind of my example, but it'd be really cool to kind of see in the room everybody else's. We'll see what's coming through on the word cloud now. So we've got some other marriages like mine. We've got moving house, buying a house. We've got single parenting, really, really good point, and how that affects children just generally. Yeah. House renovations, health issues, another really, really good point. And I know Ben and Attivo have some fantastic examples of how they've supported through that kind of life stage. Having children and that effect. What else is different on here? University fees, another good one. Schooling, buying land. Is there anything you want to talk around here, Ben? Anything that kind of you're really used to seeing? Any kind of different ones through here or ways that you know you could support?
Yeah, I think like the key thing is when clients come to me and say, Ben, this is what I want to achieve, it's absolutely
Mm,
flexible. If you're making contributions into ISAs or general investment accounts or whatever it may be, or maybe putting
yeah.
money into tax reduction investments like VCTs, it's all flexible. And actually, what I find is clients will say, Ben, for the next 6 months, I can put more in. I need to reduce it. I want to stop it entirely. It can be really, really flexible, but I think absolutely life takes priority. You're always going to help children with university costs if it's affordable, school fees.
Mm,
And also, like you, Keeley, you probably spending more money on your house now to get how you want it. And actually, that should definitely take priority because absolutely investing is great. And from my perspective, of course, it's brilliant because financially it can make you really secure and provide that peace of mind. But
mm.
absolutely, life takes priority. Life is much more interesting than investing, but investing should just be alongside it to support your future as well.
No, absolutely. Yeah, thank you for that insight. Um, so to go into our next section, just going to close down this poll here. So I think to talk around, Ben, one of the services that Attivo offer as well is around that kind of audit. So as a business, kind of you've seen every possible offering. What do you think is so common for benefits to remain static instead of being life stage led? So why don't they move with the life stages? Why do they kind of stay where they are and not really evolve to what employers or employees actually need? It might be based on some of these life events just shared, but have you got any
Yeah, I
insight
think
into that?
a lot of businesses kind of can be maybe a little bit static on what they've got.
Mm,
So actually, we've got this workplace pension for our employees, and I assume it's still good. Whereas actually, we might offer life insurance or critical illness or income protection, but actually, are you getting good value for that? Have you been with
yeah.
the same company for a decade and have your premiums increased significantly every single year? So what we do is we do audits of corporate schemes. So come in, look at what you've got free of charge and see if there's savings there for you. There's
Yeah.
never like a one size fits all approach. And I think, benefits mean different things to different people. But I think when it comes to employees looking for work now, I think the job market's changed a lot. I think young people want more from their employer. They want salary sacrifice cars. They want cycle to
Yeah.
work schemes. And actually, they are a bit more picky about what they want from an employer. But actually, do you know what? Employees have got the flexibility via like Pluxee as well to offer those benefits.
Mm.
And it's fitting that into to maybe the demographic within their employee sphere as well and seeing what Pluxee can offer.
Yeah, I think that sounds good. And I think that's the beauty of our partnership, right? Is that we can support clients in many different ways. And what we're going to do at the end as well is show a QR code in case any client here today is wanting to maybe speak to Attivo directly about what that benefits audit actually looks like and how we can both support in shaping that and making sure it is not static and continues to move. I just wanted to know, I can see all the questions coming through, so thank you everybody for getting involved in the chat there. That's really, really great, and we will go to answer those at the end. We'll make sure there is time. But to whiz on to the next section, and kind of we're coming really towards the end of our time here. And what we wanted to leave you with is obviously something tangible, kind of that kind of last takeaway, especially for those seeking to sense check your offering and kind of reshape what that strategy might look like. And really that is answering, what does good actually look like? Is what you already have in place doing what it needs to do, or do you need some assessing of that? So what is the goal? And what we're trying to do, obviously, as we've said the whole way through, is just create that financial confidence within a workforce, so that all of the benefits that you have through ourselves or through different providers can actually be well understood and, of course, utilised, showing the value for the employees. So starting with our current clients, all of your employees obviously have access to Attivo. And I think this was one of your questions. Who was it? Natalia, I think, asked a question around wanting to see what that platform actually looks like in turn. So what we'll do after this call is absolutely set up a demonstration for you so you can actually see the value of that. But in short, what it is, when your employees log on to our Pluxee platform now, they will see an area called the Financial Wellbeing Hub. And then that hub takes them through to a space that is powered by Attivo, gives them a whole host of content. They just want to read through the content and understand how they might be able to support. And then they fill in a form basically to set up a meeting with one of the financial planners at Attivo. And they will talk through their personal life stage, financial positioning, ask a bunch of questions and make sure that the conversation is led for what is needed for them. And that first session is completely free of charge based on our relationship. Have I understood that correctly, Ben? Is there anything further you want to add about kind of what that meeting will entail?
No, absolutely. I think it just gives employees an opportunity to have a conversation with me or one of my colleagues and say, right, this is where I'm at financially.
Yeah.
Am I on a good track? Should I be making changes? What guidance can you give me? And quite a lot of the time, it's sort of like similar questions, and it's literally like quick fire, and I can give them some guidance. And if I can help them more, absolutely, that's brilliant. But if not, it's just asking those questions you don't want to ask your employees necessarily because it's maybe personal, it's linked to your partner or family, and it's just seeing how we can help more people, really.
Absolutely. Fab. So that is live for all of our clients to use, I think is the main thing to note there. And then the layer onto that as well is to Ben's point, I think he mentioned it near the start, is that they run something called our clinics or surgeries, whereby Attivo can go into your workforce and do one-to-one kind of financial planning sessions with employees should they wish to do so. They can run seminars and webinars similar to how we are doing here now, whether that be face-to-face or virtual, bespoke for your employees as well. So that's really important to mention. We did one of those at Pluxee and it was amazing. We had over 20 people have a one-to-one financial planning session, whether that be around mortgages, financial planning. They made sure that the planners understood kind of the steer of the conversation before going into that. Again, just making sure that the full value is used within that meeting. So yeah, I just wanted to know kind of that's what we've got set up for your question there, Natalia, but we'll make sure we reach out afterwards as well. So I guess kind of a bit more of a takeaway and a last question to look forward here, Ben, to answer. So with that guidance, it obviously gives us the peace of mind to create solid foundations for the future. So what's the simplest way to tell the difference between a benefits package that looks really good on paper, so it looks like you've got all of the fancy benefits, you're ticking all the boxes across financial well-being, mental well-being, reward and recognition, but actually what is one that really genuinely builds financial confidence, do you think?
Yeah, I think firstly for employees, understanding what you've got, whether it be like cash plans, private healthcare, and absolutely using it because as employers, you're providing that and you're paying for it. So we want it used. That's really, really important. So actually, if someone's worried about something health-wise, use your private medical insurance and get it looked into. But I think it all depends on like individual circumstances as well. I think absolutely take advantages of all the tax benefits of pensions, salary sacrifice arrangements, for whether that be cars or bikes as well. And then also the cash plans offer huge benefits. But I think really it's just understanding what you've got and promoting what you've got to employees as well, because I'm sure as employees you do offer really good benefits, and also reviewing them. So actually, if you feel that you want to review those packages, you're not tied into providers, and as independent advisors, we can come in and review it and just give you a comparison on how your benefits shape up, how they look, and then look at the costs associated with any potential savings which are available via the benefits you offer.
Yeah, I totally agree. And I think to layer on there as well from kind of our perspective, we know the why is really simple. It's the financial stress that impacts engagement, productivity, and the overall well-being at work. And I think how we support with the how really is supporting that easy access that's relevant, obviously, to the life stages, embedding it into that everyday employee experience. So we obviously have that app that is easily accessible for someone to go on to every single day. And that combines everything in one place, whether that be financial well-being, salary sacrifice, or recognition. I think it's consistently communicating with a trusted partner that's really important.
Definitely.
So, Fab, I'm glad you agree. So to move in quickly, just to some kind of quick fire questions. Some of them are ones that had popped up within the chat. Some are ones that we've just kind of thought would be really good to fire at you at the end of our meeting, Ben. Hopefully they're not too challenging. You've got some answers for us. So just to start off simple. So when can I even access my pension? What does that look like?
Yeah, no problem. So it was always you can access your personal pension from age 55, but from 2028 that's increasing to age 57. So 57 will be the age you can access your pension moving forward for anyone born after 1961.
Okay, fab. So then how much will I need to retire comfortably? Maybe a bit of a
Well,
broad question, but
yeah, so that's the biggest question, right? So clients, they come to me, when can I retire, Ben? It's all about working backwards, right? You want to retire at 65, you want £3,000 a month jointly with your partner. Okay, then, so we need to work backwards to see what you need in your pension pot at that point. And that's where, advice is really needed, because you can have, £500,000 in your pension, but if you want £10,000 a month, it's not going to last very long. So it's all about putting a plan in place and then working towards it.
Okay. And then last but not least, so what are the options for taking an income from my pension? So looking at that kind of financial well-being, is that an option? And then if so, what options do you have?
No worries. So it used to be you would get your pension pot, you retire, and you buy an annuity, which would provide you an income for the rest of your life. Annuities now aren't really used. People tend to access their pensions flexibly, so by what's called drawdown. So we touched on it earlier. You get 25% of your pension tax-free, but you can take that as a lump. You can take it monthly. And the key thing as well is all about tax efficiency. You don't want to be taking money from a pension paying tax on it if you don't have to. So pensions are super flexible in the way you can access them. And I think probably the most important thing of my job is actually trying to educate people on the flexibility they do have with regard to their pensions, and then helping them know what they've got's enough or how to get there.
Okay, great. Well, hopefully they weren't too challenging as our little quick fire round, Ben. And we'll go to some of the Q&As in the chat now. Some of them we have answered in a roundabout way, but I'll go back to Natalia's question at the start. So she asked, it would be also useful to understand how this support could be used in a fixed setting, such as a pension plan is set and life assurance is set for everyone in the organisation. So how might Attivo be able to help with that?
Yeah, no problem. So if you've already got all that in place, we could come along, do an in-person presentation or put it online as well, and literally just make all your employees aware of what they've got, why it's important, the advantages of it. And then if they wanted as well, we could do host a like time slots for employees that can be online or in person as well, and they can throw questions at us.
Okay, Great. Hopefully that answers the question there. And then the next one from Dominica, we've got, as an organisation, we already have an external provider for our shared cost, AVC scheme, and broader financial wellbeing support, which is great to know you've got that in place. Salary sacrifice, payday loans, guidance, tools, clinics, webinars, etc. I'm just interested to understand whether this new Pluxee and Attivo partnership might impact our current contracts with these providers, and if this is an option that will be an additional fee to use as part of our Pluxee contract, or a free element that can be opted in and out. So yes, to be clear on that, the Financial Wellbeing Hub, as you can see on the little screenshots on screen now, that is how it looks live on your platform as we speak. So unless you have asked to be opted out of that, that will be live on your platform. Of course, we can opt you out. It is a free area that we have enabled for all of our clients to be live and ready to use, but you can opt out. It would be good to understand some more information in terms of how there might be a certain overlap, but that is obviously completely up to you, Dominica, if you feel that you want to stick with your current providers and push that rather than this Financial Wellbeing Hub. Great. So then we've got another question from Sean. So we've got, if changing the amount of pension contributions, can this be done at any time, or is it a set date, and are there changes limited during a 12-month period? One for you, Ben.
Yeah, really good question, actually. Yeah, lots of people think it's like fixed at maybe in January or maybe end of a tax year. But no, it's all flexible. So if you want to increase your contributions, email to HR generally, or sometimes people might have a platform they can do it on. Email them with the increase you'd like to make. So an extra 1% of my salary, or an extra, say, £50 a month, whatever. So yeah, it's an email, and then that can be changed as many times as you wish. So yeah, make sure get HR working hard.
Perfect. Great. Thanks, Ben. So we've also had somebody ask, do we get access to this recording? You absolutely do. That will be sent out after this meeting. Will also be shared by your delegated CSM here at Pluxee. We'll be sharing it on socials. It will be live on our website. But if for whatever reason you don't get access, please feel free to email myself or Ben directly. But that should be on its way to you. We have another question. So does Ben think that interest rates are going to stabilise around 3% in the next couple of years?
Yeah, really good one. So we've seen inflation just dropped, actually, but of course it's going to go up a little bit with what's going on in Iran and sort of general cost of living. I think what we'll probably see is inflation peak maybe towards the end of the summer, but I think the key thing in the UK is the economy needs interest rate cuts. The government needs interest rate cuts because of the interest they're paying on the borrowing as well. Bank of England, of course, entirely independent. But I think, yeah, certainly if we move towards maybe into 2027, I think we will see interest rate cuts, because I think the economy is going to need it. And as long as inflation can be brought back under control at a reasonable level between maybe 2 and 3%, I think we will see interest rate cuts, which is great for businesses when they're borrowing money, great for me because I've got a mortgage, and everyone else with a mortgage. It also brings the general cost of living down in terms of credit cards, loans. So I think we will see a reduction to interest rates, but it's just questionable if we see them rise slightly in the short term.
Okay, great. Thanks, Ben. So I think that is all for now. We do have a few minutes left, so I just wanted to finally show the QR code that's on the screen here. So if there is anything that you wanted to reach out to specifically to Attivo, then please scan that. But obviously we are your kind of Pluxee partner here, and we will be sharing the recording and some cadence following this meeting. And just a closing line for me, obviously a huge thank you for joining and spending the time with us today. It's always great to have our clients and prospects kind of in a virtual room together to be able to have these open conversations and just help you build on that financial sustainability of your employees. And just one final food for thought. So our overall goal today isn't to push people necessarily towards planning. It is to remove the fog that stops them from even thinking about it, and just helping with that removal of barriers and creating that safe and trusted space for support as your partner here at Pluxee. And that is everything from me today. Ben, have you got any closing lines or anything you wanted to share?
No, I just think obviously my focus in sort of my role is absolutely financial planning, but I think it's really important. Like money doesn't make you happy. Having a financial plan doesn't make you happy, and absolutely like your greatest wealth is always your health, because actually without really good health you can't do all the things you want to do.
Yeah,
And actually, enjoying and making the most of life is really important, but just having a planning for the future as well from a financial perspective is definitely really important.
absolutely. Love that. Thank you, Ben, and thank you everyone for joining. I'll close the meeting off here today, but do get in touch if you have any further questions or advice needed. Thanks all. Take care.
Bye bye.